Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 23rd of August. All right, now, as we look at the markets, not much happening, right? And that's because there's very limited fundamentals out this week. And obviously with that, you've got the focus on the Jackson Hole Symposium, right? Where all the central bankers, they used to invite a few of the finance ministers along as well to sort of have a chat. Now, out of that, they're talking about the key themes that we're going to be focusing on, or you'll be reading through the week, are the Fed still on a sort of tightening bias or hawkish stance, and then also the unraveling of the Chinese economy, right? Really struggling. Now, for years, China has just undercut its currency, like just completely going against every sort of principle of trading or currency management to keep that big Chinese economy going. Now, have they got to the end of that? Well, maybe, and it's about time that China really felt the brunt of over sort of inflating, I was just going to say overinflating the numbers, but overinflating their whole economic growth plans, right? It's just insane. You can't have like 1,000% on 1,000% growth every year, right? So anyway, it's going to be interesting to see how that plays out. So there's no need for me to really embellish a lot of what's happening at the moment, because if we look at the markets in general, like on a daily percentage change, well, the equity market's pretty muted, right? The currency market's also pretty muted there as well. Now, these ranges, some of these have been reset on the currencies in particular, but not sort of dramatic moves, right? And I'll just give you a look at the charts on the hourly perspective, right? Everything's sort of on a short term, still working the same. US equity futures all trading down. Nice to see the NASDAQ come and touch that high. That's actually, you should understand, that's a really big confidence instilling sort of aspect here, because it comes back, tests the trend line and then fails. You're like, okay, great. What that tells us is the market is watching that trend line very closely, right? So that is a really key point that you need to take out of that. Gold just sort of grinding away there. It looks like it's found its sort of equilibrium price there around that $1,900. And same with oil, trading sideways around $80. Euro, well, this is a little bit of a surprise. There's more news, or not news, more speculation, right? When there's nothing really driving the markets, that's when speculation comes into play. And they're sort of talking about maybe not just China's looking a bit sick, but also Germany, right? The German economy is extremely resilient. So if it starts to sort of splutter, Europe really gets sick, right? That's what we're going to see. And anyway, Euro down about 50 or 60 points. That's something of note. And the dollar index just slowly creeping topside, right? And if I come over here to the currencies, just to give you a bit of a overview there, now we've already been through like Euro and dollar index. The one instrument here, and you can sort of see, okay, sideways trading here on sterling. It's sort of whipping around all over the place. Aussie still moving down, as is the Kiwi. Dollar CAD still sort of cruising topside. Dollar yen also, although it's starting to drift sideways here at the moment. Now, one instrument here which really sums up the week so far, or trade sentiment, is dollar Swiss, right? Here's a previous sort of longer term resistance line. Here's a short-term support line where you've got 1, 2, 3. You come up with that fourth touch. And so loads of touches on that top resistance line. And what you get is uncertain markets is you just get a little flush out to the top side, a little flush out to the downside, and back into the middle of the range, right? And that's exactly what we're seeing here. If I widen that out, you'll get a better idea. Okay, so there's a good example of what we're dealing with this week. Now, do you buy or do you sell? Well, this technical framework would tell you, I'm not really sure either way. Now, you can be sort of adjusting. I've got that trend line, resistance trend line, the top orange, because has been broken, and that is the latest high. So if I was going to update it, would I change it to have my trend lines like this, because we do have a new high or low? Yeah, you can. That's for sure. Because that sets us up for where the trigger points are for the next major move, which may be in a few days or maybe today. But really what I like to see is, with my analysis on the short term anyway, is keep it more like this, because then you know exactly, hang on, this is uncertain trading. There's no clear direction just at the moment, right? There's very short-term trading opportunities, but is that worth putting your cash on the line? I don't think so. So that's where we are with the major instruments. Now, let me just cover what's coming out here. Let me just drag that across. Now, out of all the data today, right? So there's two key things happening, themes, right? The Fed potentially raising rates again, or that hawkish stance, right? Not the end of the interest rate hiking cycle in the US. China, weakness in China, and then also now there's rumblings that the German economy may be sick. So what I would do is look at the fundamental data that's coming out and track it, right? The ones that do have some sort of implication. Now, we know there's a little bit of pressure on the downside in euro. So I'll be watching the HCOB manufacturing PMI numbers today in Europe, right? If there's further weakness there, it's going to add to the story. And at the same time, if there's an improvement in that data, well, maybe that is just a rumor going around. You got some UK manufacturing PMI numbers, Canadian retail sales, right? And then you've got a bunch of US numbers as well as some crude stock numbers there as well. Okay, so these are all the little building blocks that go towards those bigger numbers like the CPI and employment, right? And these numbers here as a group can really work towards giving some currencies some major direction and indices for that matter as well. Now, if I just sort of scroll down here, if I look through News Squawk, you've got a bunch of numbers here. You've got the expected numbers and just the previous, no real ranges for the data. With the Canadian retail sales numbers, you do have, one above, you do have a range there to work with. It gives you more tangible information to trade. If the number's outside the range, you're going to get probably a more sustained move. But once again, it's a quite weak. So traders will jump on that, but they'll probably jump out of it as well as quickly as it comes. EU consumer confidence, okay, the flash numbers, once again, looking for pretty weak numbers. With the current setup with euro, I think this could be a real catalyst because if we get a number weaker than minus 15, and I'm talking something like minus 20 or minus 22 or something, like a bit extreme, you've got to expect euro to move. And euro against the dollar, also euro against the crosses. Then you've got the new home sales in the US and some of these crude numbers down the bottom. And that's pretty much it, right? It's slim pickings. So if it's slim pickings, maybe come back, have a look. If you've got time during your trade day, some of these numbers are coming out. I'll have a look, but don't get over excited about trading them just at the moment because there's not a lot of momentum going around. The markets are looking for the bigger moves. And what we're talking about is something that will impact the bigger trends, right? At the moment, the equity markets are a sea of red, and that's pretty easy, pretty much stands out across the board. If you're looking to follow the trail of the markets, then North American equity futures on a daily percentage or daily perspective, okay, overall equity futures are slightly up, except for the NASDAQ, okay? Well, actually, NASDAQ futures are up. Is that giving us a risk-on profile? Pretty much, okay? Swiss yen CAD down, dollar index pretty flat. Commodities, well, crude's down, gold, silver slightly up. Okay, so there's a bit of disparity there. Risk on, risk off pairs, well, they're up, so that's right. There's a risk on profile in play. Safe havens, well, they're sort of all comfortably moving topside. So safe haven trade looks like it's back on deck, and that should probably keep going up as we get closer to this Jackson Hole Symposium, right? The media itself is creating the story. And what I mean by that is it's creating the momentum. It's creating the focus on the Jackson Hole Symposium. So is that a good thing? Well, it sort of diffuses trading for now, but it does create a pressure point come the end of that symposium when the Fed central bank governor, Jerome Powell, has his bit to say about what's going on. All right, guys, that's it for me. Easy to follow the markets. Don't get overexcited. Don't spend too much time in front of the screens. And I've seen it out there a lot, whoever says, your profits have a direct correlation with how much time you spend in front of the screens, well, they are correct, but it's not longer. It's shorter, more defined, accurate analysis. and you'll find you won't be fatigued, and you'll be able to hit these markets when the opportunities arise. As my t-shirt says, guys, do simple better. Have a good one. Cheerio.